what's going on in the market right now? Yes, it is, and interesting is a lazy adjective, but it is an interesting time in the marketplace right now, in every market, right? So I was listening, Wells Fargo has a private banking group, and I was listening to one of their updates recently. And so they brought in people, in the growth stocks. They brought in people in the foreign stocks. They brought in people in the in commodities. They brought in people in currencies, treasuries, they brought in all of their different experts. Okay, and at the conclusion of it, they basically said there is no safe haven right now. Well, that was terrible news. What was the one asset class they did not mention? Real estate. Why? Because they can't take your money and invest there and make themselves money. So, but you guys can, because you guys have that knowledge. So every week we get together, we share what's happening in the marketplace and do a market update. So I will tell you, today's market update is going to be a little bit of a hybrid market update. So what that means is for 4 of the slides, I'm going to show you the data for August, but one of the slides I'm going to show you the data for September. So typically all of the MLSs close around the 15th or so of the month, give or take. But so far this month, where we are in the month, we only have one of the MLSs reporting. And lucky for you guys, it is the Dallas-Fort Worth MLS. So what I'll do as part of the market update tonight is I'm going to give you the overview for how Texas did. So this is the August market update for Texas. It's going to be pretty similar to where we will hit in September. But the average sales price for all of Texas was up 10% last month, 417,000. Closed sales last month were down. They were down 12.4% versus where they were this same time last year. So we're kind of getting into that range of where we were in that 2019 kind of volume territory, which 2019 was a record breaker. So was 2018, so was 2017, so was 2016, so was 2015. But we're not going to be in the 2021 record-breaking territory for 2022. But if you have some perspective, you'll know that it's still doing incredibly well. Let's see here, what else I want to highlight. Months of inventory is growing. Months of inventory, how many of you guys are familiar with this concept and understand what months of inventory means? Okay, a couple of you guys. How many of you guys are familiar with the concept of days on market? Most people get days on market better than they get months of inventory, just because that's what they've seen over the years, right? So months of inventory, I'll explain that, is basically if we stopped listing houses today, based on the buyer demand that we've had over the last 12 months, it would be this amount of time before we are completely out of an inventory of homes for sale. You understand that? So if we stop listing houses today based on the demand we've had over the last 12 months, in exactly 2.6 months, we'd be completely out of an inventory of homes for sale. I want to give you guys some perspective. So that's about double where we were this same time last year. But just to give you perspective, our 40-year average in the state of Texas is around a 6-month supply of inventory, meaning that over the last 40 years, we would stop listing houses. It would be 6 months before we would be completely out of supply of inventory. Now, I want to further kind of develop this concept. Months of inventory can be skewed. So when the market is slowing down, months of inventory skews lower than what it actually is. Do you understand that? Because over the last 3-4 months, what have we seen with sales? They've gone down. So the reason why months of inventory, the way that the MLS calculates it, goes back 12 months is because it wants to count for the distribution curve that is common in the sale of homes, right? But in a market that's going down and going in terms of sales, reduction in sales is rapid. You really only want to go back about 3 months to look at your months of inventory. So even though this says 2.6 months, If sales were to stay at this same pace, which is down somewhere between 10 to 15% versus where we were last year, that months of inventory number would actually be much higher. Now, it would still be nowhere near that 6 months of inventory mark, but it would be much closer to that than what we're seeing it is right now. Is that an okay explanation? Do you guys follow that? Okay, good. So I do want to be clear on that because sometimes that can be deceptive. On the flip side of that, when sales are starting to go up dramatically, right, months of inventory might look higher than it actually is. But right now we're on the part of the sales cycle where sales are slowing down rapidly. For the Houston market, average sales price up 9% versus where we were last year, with the sales price up to almost $412,000. Last month in Houston, closed sales volume was down 17%, and the pending sales, which is our closest leading indicator of what closed sales will be next month, that was down 11% year over year. However, where are people going? They're not buying. What are they doing? Renting. So that means leases are up 19% year over year in Houston, and lease prices are up 7%. So a lot of would-be buyers are now moving into becoming renters, right? Because they think when interest rates go down, when the truth is all the realtors need to be saying, no. When interest rates go down, you can just refinance then. You better get yourself a house really quickly because interest rates are not going to be going down anytime soon. So something to think about. In the Austin market, the sales price was up almost 11% to $630,000, whereas the closed sales were down 23% year over year. Austin had one of some of the most meteoric rise over the last 2 years, but it's also had some of the biggest reductions in terms of year-over-year sales as interest rates have gone up in 2022. Pending sales, again, our closest leading indicator, they're down by about 30% versus where they were the same time last year. So that's what. So we'll probably see sales down somewhere between 25 and 30% as we close out September for the Austin. Now, the other interesting thing is in Austin, the close price to the original list price had been somewhere between 102 and 106% of list price throughout 2021 and throughout the first quarter of 2022. Now, Austin is looking closer to 96.6% of list price. And then they've seen inventory increase by about 250% in Austin, putting it at a months of inventory at 2.9. Now again, that might be a little bit lower. That stat might be lower than what it's probably higher than that because it's seen such a reduction over the last few months. In the San Antonio market, the average price was $391,000, up 12% versus where we were the same time last year. Sales were down 13%. And pending sales are down about close to that 20% range as well. So we're seeing, or in the 15 to 20% range. Leases, however, in San Antonio are up 28% year over year. So again, you're seeing people move into that lease market, and lease prices up 11% year over year. For Dallas for September, so these are the September numbers for Dallas. I see all the cameras coming out now. The average price was up 11% year over year to $482,000. Closed sales were down 17%. Right now there's a 2.4 month supply of inventory in the DFW area, and pending sales are down 20%. Active listings at just over 19,000, up 79% versus where we were the same time last year. But we were operating on an unoperable level in 2021. There were not enough homes. So now we're nowhere near a balanced market. But adding 79%, I know that sounds like a big number. But literally, like before, every house that was put on the market was going multiple offers above list price the same day it was listed. In some cases, sight unseen by buyers, just saw it online, send the realtor with earnest money, option money, and a contract much higher above list price. Let's go grab it. So we're not seeing that like we used to, but the market is still moving. It's down 17%, but 83% are still closing at the same rate, right? Leases are up in the DFW market. The number of leases are up 22%, with the average lease price up 8% to just over. So the lease prices are 25-28. So, guys, do you guys get an idea of where we are in the marketplace right now? Or are we busy listening to somebody else's conversation? I don't know. Yeah, you have a question. Yes, sir.
How does the interest reflect with what happened last month with the interest price hiked up? How does that reflect everything?
How does the interest rate increases that we've seen over the last 6 months, it affects our sales for sure. So that's why most of the markets have a sales number that's down somewhere between 10 and 25% year over year. So that's how it's affected it. Now, what was one of the big things that we noticed about all the numbers that I showed you guys? Prices. What do we notice about prices?
They went down.
Sir, you need some glasses on. So Osmar, I'm not asking you. I'm asking everyone else who's watching. Prices were up. Prices were up. Okay. Prices are up. Okay. And now I know you did get in here late because you had to make a stop at the bar. But that's, I'm kidding. I'm kidding. I know that you went to the liquor store instead. No. Prices are up in all of those markets. In fact, I'll pop this back on here. Now, what I do want to say, and what these charts don't describe, is that early in the year, our prices were up at a much higher rate. Like January, February, March, we were looking at prices being up 15 to 20%, and we have come down off of some of those prices month over month. But the way that we show the data is year over year, because there is that distribution curve of when sales come in and go. Yes, ma'am. Yes, ma'am. Back to the slide.
So leases are up 22%, but lease price is up.
Yes. So leases are up 22% versus the average lease price only up 8%. Say it again.
So that means
The demand year over year went up 22%. Yes. The prices are up 8. Well, so there's not always a one-for-one correlation. So, for example, if you look at DFW sales, a lot of people might say, well, sales were down, that means price is down. And was that the case? No, not at all. What it depends on is the inventory. So just because we had an increase in the number of leases, right, doesn't mean that we brought the inventory down so much that it's going to be a 22% increase as in the lease price, right? But as inventory starts to continue to come down, and that's what we forecast for the lease market, we will see those lease prices continue to go up. So one of the big things that we saw happening in 2008, anybody in here invested in 2008? No one. A couple of you guys. So some people found that in 2008, well, this is a property I thought I was going to sell, but instead I ended up holding it as a rental. So a lot of people became forced landlords to be able to get through that time period. I see that evolution happening possibly again because of the reduction in sales, and so that's something that will be a change for us. So great questions, guys. Yes, Brian.
You have your source down there for the data. Is this available to the public?
This is available to the public, so you can get it at My MetroTex and the Texas A&M Real Estate Center. So if you go to My MetroTex, you scroll all the way down to the bottom. There's going to be a market update section, and the Texas A&M Real Estate Center does it, even breaks it down by county in North Texas. So it's a great site for all of this data. Good question. Yes, sir.
Do you have any stats on how much I saw you mentioned commercial.
Yeah, I don't have any stats I'm presenting tonight around commercial. But what do you think we're seeing in commercial leases? Are you talking about multifamily leases?
No, I'm not familiar with the
Commercial land development. I don't have any stats on that. I can speak to the multifamily market. What are we seeing in the multifamily market in terms of leases? They're going up. The number of leases are going up dramatically. What are we seeing in terms of the average price? Going up, right? So, you know, every time we think we built enough apartment buildings, what do we find out? No, we have not. No, you are wrong. No, you can keep building. But I don't have a commercial update for land development, but I can recommend the Texas A&M Real Estate Center. So they just, they published several different articles about land development and some of the different opportunities and issues around that. And they're publishing stuff constantly. So it's an excellent source, and they'll break it down by some of the different areas within Texas as well. So good question. You're welcome. All right, guys.